Are stablecoins the future of global finance, or do they pose a hidden threat to financial stability? The World Bank has shared its thoughts on the rise of stablecoins, and their take might surprise you. Could stablecoins revolutionize how we handle cross-border transactions, or will they require more scrutiny to avoid risks? Stick around to hear the full breakdown. Welcome back to Gold Rush Crypto Daily Channel, your go-to source for deep dives into the world of cryptocurrency, where we keep you updated on the latest news, trends, and expert insights. Today, we're discussing an important topic that's been making waves: stablecoins, and the World Bank's opinion on their potential impact. Whether you're a crypto enthusiast or just curious about how stablecoins could affect the global financial system, this video is packed with valuable information you won't want to miss. Before we dive in, make sure to hit that like button and subscribe if you're enjoying our content. Also, don't forget to turn on notifications so you don't miss any of our updates. Let's get started. Imagine a world where you can send money to someone on the other side of the planet in seconds, with little to no fees. Sounds incredible, right? That's what stablecoins promise. But with great potential comes great risk. Could stablecoins undermine financial stability and require tighter regulations? Stay with us until the end to hear both sides of the debate and get our expert analysis on whether stablecoins could be a game changer or just another crypto controversy waiting to happen. Let's start with the potential benefits of stablecoins, as highlighted by the World Bank. 1. Financial inclusion. The game changer. The World Bank has recognized that stablecoins could play a critical role in promoting financial inclusion, especially in emerging markets where traditional banking systems may be underdeveloped. Stablecoins can provide a low-cost, digital alternative to storing and transferring money. Think about it. Millions of people who don't have access to banks could suddenly participate in the financial system through their smartphones. But here's where my opinion comes in. While the World Bank sees this as a game changer, the adoption of stablecoins in less developed regions may still face challenges, such as technological limitations and local regulatory environments. For stablecoins to truly transform these markets, we need to see widespread adoption of digital infrastructure and education. And that's no small feat. 2. Cross-border payments. Speed meets savings. The World Bank also notes that stablecoins could revolutionize cross-border payments. Currently, international transfers can be expensive and slow, especially for remittances that families depend on. Stablecoins offer a way to reduce fees and speed up these transactions. This is a huge opportunity for millions of people sending money home to their families. In fact, in countries where remittances make up a large portion of GDP, the impact could be monumental. If you think about it, a small decrease in transaction fees could save people billions of dollars annually. But let's not get too excited just yet. My take on cross-border payments. While the potential for streamlining cross-border payments is there, I believe there's still a major hurdle: the need for regulatory cooperation between countries. Without that, we could see uneven adoption, fragmented markets, and, in the worst case, scenarios where some governments outright ban the use of stablecoins. Until there's a clear framework for international use, it's hard to say just how big this breakthrough will be. 3. Regulatory uncertainty. The dark cloud. Speaking of regulation, this brings us to one of the biggest concerns the World Bank has regarding stablecoins: regulatory uncertainty. Unlike Bitcoin or Ethereum, stablecoins are pegged to traditional assets like the US dollar, which means they need a strong regulatory framework to function securely. The lack of clear global regulations around stablecoins could open the door for risks like money laundering, fraud, and even terrorism financing. Here's where things get tricky. I believe that the decentralized nature of cryptocurrencies clashes with the centralized regulatory frameworks of governments. The World Bank is right. If stablecoins are going to be widely used, there must be a clear, internationally accepted regulatory framework. Until then, we're venturing into uncertain territory. 4. Financial stability. The ripple effect. Now, the World Bank also highlights the potential threat that stablecoins pose to financial stability. Yes, they're designed to minimize volatility by being pegged to assets like fiat currencies. But what happens if people lose faith in the institutions backing those stablecoins? A sudden drop in confidence could lead to mass sell-offs, potentially destabilizing the financial system. This is something that doesn't get enough attention. While stablecoins seem stable, they're only as good as the entity backing them. My take? If major players like Tether or USDC faced a crisis of confidence, the ripple effect could be devastating, not just for crypto but for the wider financial markets as well. 5. Consumer protection. Who's responsible? Another point the World Bank raises is consumer protection. The average user of stablecoins might not fully understand what backs these assets or how they're maintained. Without transparent information and accountability from issuers, there's a risk that consumers could face unexpected losses. Here's my opinion. Transparency should be non-negotiable. If stablecoin issuers aren't providing clear, easily understandable information about how their coins are backed, they're essentially gambling with consumers' money. This is an area where stronger regulation could actually benefit users by ensuring they're not being misled. 6. Stablecoins versus CBDCs, a future partnership? Lastly, the World Bank touches on how stablecoins might interact with central bank digital currencies, CBDCs. They suggest that stablecoins could coexist with CBDCs, provided there's a proper regulatory framework in place. The idea here is that stablecoins could complement CBDCs in areas like cross-border payments, creating a more diverse and resilient financial ecosystem. This is fascinating. While some people see CBDCs as a competitor to stablecoins, I think they could actually work hand in hand, offering users more flexibility. Imagine a world where you could choose between using a government-backed digital currency or a stablecoin for different purposes. Talk about financial freedom. What do you think? Will stablecoins revolutionize global finance, or are the risks too high? Drop your thoughts in the comments below. I'd love to hear what you think. And if you're finding this content valuable, don't forget to smash that like button and hit subscribe to stay updated on all things crypto. So, while the World Bank recognizes the potential for stablecoins to drive financial inclusion and innovation, they're also cautious about the risks, particularly around regulation, stability, and transparency. As always, we'll continue to keep an eye on how this space evolves. Thanks for tuning in to Gold Rush Crypto Daily channel. Be sure to check out our other videos for more in-depth crypto news, and we'll see you in the next one. This video is for informational purposes only and does not constitute financial advice. Always do your own research and consult a financial advisor before making any investment decisions.